All right. Hey there, everybody. Welcome. Christopher Inks with Texas West Capital coming at you live here just a few minutes after, 11 a.m. Central Standard Time on Friday, the 2nd of June, NFP Day 2023. Man, oh man, it's a great day outside. Hopefully you guys are having a great time too as well. Let me kind of see if, I see data's already here. Good to see you. So now, just so you guys are aware, we do have Fibbo again this week, and we tested it out. Everything should work fine this time. I am using a different stream service now. So, yeah, hopefully this will be exciting times here. Let's see real quick here. What do we have? We had NFP today. And so we had the non-farm payrolls. They increased 339,000. They were expected to be 190,000. So a much greater increase than was expected. Last month's numbers were revised from 253 to 294. And, when we get in here, also the unemployment rate popped up. Well, we were 3.4 last month. Expected to be 3.5 this month, was actually 3.7. So we had an increase in unemployment along with an increase in jobs. Now, how does that happen, you say, or you ask? Well, simply just that there's more people out there. That there was a greater number of people coming in to look for work than there was actually jobs getting there. So, you just have a larger number of people actually coming, what they call that economic activity, right? You've got people, remember, we don't count people, or the government doesn't count people unemployed if they're not actively looking for work. So we just had this basically a big influx of people actually looking for work along the same time with the new jobs creation. It was just a greater percentage were looking for work. So that's how you get it. Now, what does that mean? We'll find out, right? So it could mean that economic activity is about to kick up. I don't know about that. The production, manufacturing, whatnot, kind of dropping here lately. But what it does mean is that, here we are. Jobs are still being created, right? We've just got to figure out this whole thing of new people coming in looking for them jobs. But, again, summer seasonality coming in. Another big part of it, if you really want to look at it, is where are jobs coming in. You want to see, are they coming in with the higher paying white collar jobs? Or are they coming in with the blue collar or the temporary jobs, or the service jobs, I guess what you want to say, waitresses and waiters and, things like that. So, nonetheless, it did come up there more. If you're wondering about oil, Baker Hughes U.S. oil rig count is going to come out around, what time is that? I think it's like around 2 or 3 o'clock today, I think, Eastern. And that's important because obviously, if there's a greater demand for producing oil, then you're going to see the rig count go up. If there's not, you're going to see it kind of drop down. So, if you're watching oil and wonder what's going on there, you can watch for that as well. Who else here? Data, I see you. Kimosabi is here. Jonas, what's going on? Kimosabi says, cool, a Fibbo Friday. Let me see here. We are also streaming one extra place this week. We're trying the Texas West Capital page there on Facebook. So I don't know if anybody's going to join in from there, but we'll see how that works. First time doing that. Pete, good to see you. Ilya, always good to see you as well. Chad checking in. Brian Riley's here. All right, guys. Y'all ready to bring in Fibbo? Let's see what Fibbo's got going on here. What's going on, man?
What's up?
Oh, I'm sorry. Here, I've got my I had my volume off over here. I can't hear a thing you're saying. There you are. What's going on, man? How are you doing?
Hey, what's up? Not too bad. I will invest in a light so everybody can see my face because I love the house I live in, but it's a lot of windows and I can't find anywhere to get a camera right in the right angle. So I got to get some lighting.
It's the price you pay for all that great window space, right? Looking out into the great trees and everything there.
Yep.
Oh, fantastic. So, man. Glad to have you on this week.
Yep.
Last time we kind of had that issue with the other stream service. Unfortunately, a lot of people were not very happy about that. Not a whole lot I could do about it, unfortunately. But, again, guys, hey, if you're paying attention, remember, Fibbo's going to be with us every other week unless something comes up on his timetable there, in which case we'll try and get him done another time. But, every other Friday is the goal. So there you are.
There we go.
Man, oh man. So, Bitcoin kind of still sitting around. It's been hovering around the same area sideways here for about 2 months now. A lot of people getting more and more bearish because of that. People are, I don't know, man. When we look at, you and I, we've been doing this a long time. And again, I try to remember back to when I was first, before I got, that breakthrough that you get eventually, if you're fortunate enough to stay in for a long time, you get that breakthrough on understanding that whole psychology side of it. And, I kind of remember back to when I was first starting, and, you're kind of unsure about what's going on. You really don't know how to understand how markets are working and whatnot. And so then when it kind of sits sideways for a while, you get nervous, you get scared, and you start thinking all the worst things possible. But what are you thinking, man? What are you thinking about Bitcoin? Do you have that chart up there right now?
Yeah, I got
Let me pull that up there.
a bunch of different time frames, but one of the things that's kind of annoying at the moment is we're still kind of in this consolidation zone between the high at 28,473 just the other day, and that low at around 26K, somewhere right around there, or just underneath. That range has been, kind of boring. I mean, unless you're a day trader and you're trying to, trade those little swings. Unfortunately, my system's a little bit more trend following. Not that it doesn't work in the consolidation; it doesn't work as well. But I'm waiting for a breakout of the 28.4 up, get a new high, or get a new low. Give me something, because right now I just been kind of back and forth. The weird thing that I'm seeing at the moment is the 4-hour is still in this bear zone here. And it's consolidating. So with the ADX pretty low, it's at 1881 on the indicator here. Anything really under 25 or even under 20 is a little bit more range bound type trading. So there's not a lot of momentum for trend going on at the moment, because that's what the ADX measures. And so that's really not giving us a bunch. But we are in the bear zone on the 4-hour. So what I'm waiting for, I have a fib extension target here that kind of falls in this range down here between 26,078 to 26,319.
Yeah.
That's that first target that if you're looking to buy on while it's in the bear zone, that might be the first spot. That's still well into the consolidation zone. So if you do buy there, I'd probably put a stop on it pretty quickly. What I look for is 3 consecutive settles under this red 141% extension. So that's at 26,078. So if it broke that, the 200% is down there at 25K. And really, that, even if it gets down to that point, it's still not bearish to me overall. But the interesting thing is that the 4-hour is sitting in the bear zone. But when you look at the daily, the interesting thing is my system just clicked into the bull zone barely while it was in this bear zone of consolidation. It did click into the bull zone. I had 10% long from some previous other stuff, so I actually added longs when it went into the zone, because that's what I do. I go with my strategy, and it kind of pressed the position. So I'm long at this average, basically 24 or 25, 457 is where my long's at. So what I'm watching here is when this while we're in this consolidation, even though that the 4-hour is bearish, but it's still sideways, I like the look of this daily while we're in consolidation, clicking into my bull zone, because that gives me a little bit of that sideways to upside potential that still could be there. So I'm not really bearish the market. I'm just kind of sitting on the sidelines, just watching this thing go back and forth. But right now I'm sitting with that. The first target I have is matches up really nicely with this high. The extension's at 29,863. That will be one of my take profit levels. And then beyond that would be the 200% off what I'm looking at is my previous bear zone. The Fibonacci extension off that is 31.5. So 31.5 would be that next level I would take profit off of those 2 positions that I have on at the moment. But that's what I'm looking at. It's kind of weird to have the 4-hour in bearish, but the daily flip to bullish. That's kind of odd, but that's consolidation for you. When you get into these, you can see things that you don't normally see, and people ask a lot of questions like, "What's going on here? What's going on here? This doesn't make sense. This doesn't make sense." So I chalk it up as consolidation. I mean, that's really what it is. Anything can really happen when you're inside of a range, bouncing back and forth, messing up people's indicators, messing up this and that. So until then, I'm really just going to kind of ride these positions on these longs, thinking that my call for 48K by the end of June, is it still in play? It's still in play, but when the daily went to the bear zone here, kind of reduced that probability, of course, because then it brought us into more of this range bound trading. But the upside potential is still there. So as long as that upside potential is still there, that 48K is still a target for me. Might not be the end of June now, but I'll be okay with that if it pushes into July, August, September.
Right.
I don't care as long as the trend is sideways to higher, and I'll just wait it out and go that direction. So that's what I'm looking at on those two time frames. I know we ended the month. One thing I was looking at on the monthly, I always like looking at, and I talked about this before. One thing I kind of look at is just the trend line breaks and the trend line objectives. Pretty simple stuff, but I use this for a lot of confluence on a lot of other things I look at. But when you take these measurements of the furthest point to the trend line and you take the break point to the trend line, you get minimum targets. So if you actually wanted to trade it, you could, but I mean, I don't really trade those. I use them as confluence with my system. So you can see that it matched up pretty well there. Of course, you had a few wicks up there each month, but then it came back down, and then we broke this trend line here, and then it worked its way up to this point, and it just kept going. But then we had this one. When you take the furthest point to this point, take that same rate of change, it matched up really nice.
There it is, yeah.
Yeah, and now we're on this one. And that's kind of where that 48K came from. This one actually is around 51,000 on this one. Does it mean it's going to go to 51,000 tomorrow? No, but I like the trend is showing that longer term look that, that 40K, 50K is still a possibility this year.
Yeah.
It just might not be in June like I thought, earlier, a few months ago.
Yeah. Well, I mean, you never know, man. maybe
you never know.
Gets bit like a scalded cat and runs. I don't know.
Yeah, that's why I said the probability is a lot lower, but the probability is still there.
Overall target. Yeah. Hey, I got a question from Dancer Eddie. He was wanting to know, do you use the ADX as a confirmation indicator in your system, or is it more active?
It's really when you look at it, I use it. Let's see if the 4 hour has a better look. Not really. I use it for a couple different things. The main thing in my system, I use it to figure out where that psychology changes. First of all, it's the RSI. Once the RSI switches into a bull or bear zone, then I look to the ADX itself to find where to set my fibs based on when when the RSI goes into the different zones. So I use the ADX to measure that psychology change in the market based on the range. So that's really the main reason I use it. I use it for other things in other models, but when it comes to my threshold theory, I use the ADX really to find that starting point for the Fibonacci levels to use in that zone that we're playing at that time. And that's what you're kind of seeing on here. When we went into the bear zone here, the ADX, what I look for is I go once it goes into the bear zone here, I put a vertical line, and then what I'll do is I'll go back to the left and look to where in this case it went to the bear zone. So you want to look for the red negative directional index going up through the green positive directional index. So it crossed over right there, and then once that crosses, I want to see that next positive change over change on the ADX if there is any. And if there is, that's where I'll start my Fibonacci level for that next zone. In this case, it actually kept falling until it hit the threshold. So I'd actually start the fib on the threshold itself. So that's how I kind of use that indicator to help guide me of where to start my fibs for that level. And the interesting thing is it works pretty well. It's all about the proportion. Price doesn't matter to me. It's really all about that proportion. So these are levels that I'm looking at probably a little bit more, not surface. It's a little bit more, kind of in the chart, because I'm trying to measure that psychology, right?
Right.
Which is not the easiest thing in the world to do, but it gives me that support and resistance levels based on that threshold
Yeah.
theory that I've kind of come up with over the years.
Yeah,
So,
man. I mean, I like it. Again, I think, let me kind of pull up. I just got a clean chart here. Yeah, I mean, again, and really all we've done here, if we want to look at even more, guys, is this. I mean, this really is kind of where we're at, right? So if you're into inverse head and shoulders, you've potentially got it right here, right? And so we're talking about that larger target there, and the pattern target here based on the height of this inverted head and shoulders would be right up there around 43,000. So that's getting you up near there as it is. And all we got here, we have this breakout, pullback, retest of support, and now we're trying to break out. We have a wedge right here. We broke out, gapped up, came back, retested that, filled that gap, hit this support area here. Now we're trying to rally back up. I mean, there's a lot of people that are very, very bearish right now, and I try to talk about it often on here and try to help people understand why they may be feeling so bearish, right? But even if you are feeling, or even if you're feeling bullish, I think the key to trading, like you said, you're like, listen, here's my system. Here's what it says is going on. And so until it says something else is going on, I'm going to keep playing this. And I think that's where a lot of new traders have a lot of trouble when they come in, is this, because they're thinking there has to be some guarantee. You have to know what's going on. But, again, I don't think we ever really truly know. We just kind of sit there, okay, well, however our system that we're looking at says it is. And so we kind of put some faith in that. And so if you're a new trader coming in, you have to understand, I've been doing this, almost 30 years. Fibbo's been doing it 20 somewhat years. And so what happens is, once you've been doing this for an extended period of time, you start to ignore, if you're smart, you start to ignore a lot of the social media takes on it, a lot of the economic analysis, the macro analysis, and you just kind of start leaning into the chart and the way your system works out. Now, I'm fortunate that Fibbo actually looks at things the same way I do generally, as far as the idea that we've got your macro, I'm sorry, not your macro, but your, oh my gosh, I can't think of the word at the moment here. Where you've got what everybody's kind of feeling, right? And then that translates into action, and that action is what shows up in the chart. So when Fibbo says, the news is in the charts, we don't mean that we know that on this day, this specific news event is going to happen. What we say is, okay, listen, because you have this social mood, that's the word I was going for earlier. You've got this social mood, yep, which leads to social action. That social action are these things that happen. And the stock market, or the markets, are the quickest reflection of what's going on, of that action, of what people are buying or selling, or how they're feeling, right? Because if people are feeling good, they're going to be buying more, right? If they're feeling worried or concerned, they'll be buying less. And that leads into the things we see. So then you get things like political events that happen, which just end up being a lagging result of what's already going. Now, this is a tough thing for most people to kind of wrap their head around. We fight it all the time, because when you first come into trading, everybody's talking about, this macro thing means this, and this macro thing means that. But if you go back and you don't just cherry pick and you look, you'll often see the same macro event with different outcomes and different, reasons why. And so, again, price action and news events happen all the time, guys. We just tend to associate it when it fits what we think needs to happen. And so, this is the difficult thing, and I get people that talk to me, and I'm sure Fibbo probably does as well, that are very, very upset when you're not bearish when they are, or when you're not bullish when they are. And
they tend to ask a lot of questions.
What was that?
They tend to ask a lot of questions.
Well, to me, they tend to be a lot more telling me why I'm wrong and how I'm this word or that word. But, at the end of the day, guys, it's one of those hurdles that you have to overcome to consistently trade profitably. Guys, I'm going to tell you, a lot of you follow big accounts online that haven't been trading more than 3 years or 2 years or 1 year or whatever. And a lot of them, and there's one market, and they've gotten lucky a few times. There's a lot of things in there that you don't recognize, you don't understand because you're new. So just, kind of pay attention. If somebody's been trading multiple markets for multiple years, that's a great place to start. But again, it's not like, okay, yeah. So I look at what I'm looking here and I go, okay, well, I've talked to you guys about this. I said, listen, we use Wyckoff, we use Elliott Wave, we use market structure on the weekly time frame. We use moving averages, all these things. We use the general definition of a bull market, right? All these things suggest that we were in a bull market right now. But yet you still get people saying, well, listen, I just don't agree yet. I don't feel like it yet. But if you're doing that, you're talking about emotions, guys. And if you're talking about emotions, you're more likely going to lose a lot more money in the end than you're going to win. Okay. And so this is me kind of putting this out there so that hopefully you're open and you're hearing so that you can go, okay, yeah, I guess I'm doing that. I need to not do that. Because again, it's that whole emotion thing that when this, for instance, the debt ceiling, right? I've been telling you guys since day one, this is what it's going to do. It's going to play out till, toward the last bit of time it has. And then they're going to come to an agreement and it's all going to be, what it is. Right. But yet you still had people talking about, oh my God, they're going to default. They're going to default. No, they're not going to. Well, first of all, it's stupid. If you're in Congress and you're part of the group that gets that makes it default, that doesn't agree or whatever, I mean, you're not getting voted back in. There's not enough people that can vote you back in. People are going to blame you for the whatever bad things maybe happen, right? So a lot of what I'm getting to here, guys, is a lot of what you're going to fight with as traders is your own emotional self. It's your inability to ignore that emotional self at times, when you can, right? It's not that it's easy, but it's got to happen. But if that emotional self continues to come in, it makes times like where we're at difficult. Again, we've been going sideways here since mid-March. So was that 2.5 months, right? But guys, realistically, I mean, look at this right here, pivots, right? Pivot is holding as support. It continues to hold as support, the weekly pivot, right? We're about to get a bullish cross here on the weekly pivot. If we start moving up this week, probably be next week that we get it. But we're going to get a bullish cross on that stochastic RSI. I mean, if you look at this as accumulation here, which you should, this is doing exactly what you expect. It's just the you're back up to the edge of the creek. It's just your retest of the previous resistance as support, of your supply as support, right? And this is what we look for. This is the kind of thing we look for before rallying back up higher, right? By the way, if you're doing point and figure counting based on Wyckoff analysis, that target is actually up there in that upper 40s, I believe, area. I think it was like 48 or something like that. I've got to look back again. But yeah, so, again, a lot of people don't understand Wyckoff and they have a lot of trouble with that. But once you learn it, things start making a lot more sense. But if you don't know it, and I'm sitting here talking about it, you're going to go, whatever, right? So just understand, it's not that Fibbo and I are just like bullish without anything. Oh, it can't ever go down or whatever. We both recognize that price is going to do whatever it's going to do. We just use the things that we've learned over decades of doing this. And we go from that in these systems that we use, and we've learned to just trust in the systems, and we play the systems as they are, and it works out. When we start getting emotional about it, that's where things have the issue. That's where we all of a sudden start second guessing, where we don't get in where we should, where we don't get out where we should. And that's where you lose money, right?
Yep.
Just checking on that. So, hey, what was that?
No, I was going to say the system will tell us when to get out.
Exactly. Yep. Exactly. But the hardest jump for a new trader is getting to that point where you go, everybody's, if they believe in God and they're Christian, just leave it to Jesus, right? Let Jesus take the wheel, whatever. Do the thing. But when it comes to trading, it's like, no, can't do it. I can't just let the system do it. I have to have my emotions in there. And that's what makes it difficult. That's what makes it really difficult, guys, to get in, right? when you should get in to get out when you should get out, right? So, but that said, let's jump on over to the DXY, man. What do you got going on there?
Hey, one thing I want to say real quick.
Oh,
This isn't a paid advertisement, but you were talking about news and social mood. One book I read a while back, and I'm sure you read it too, the socioeconomic theory of finance.
yeah,
That was a kind of a life-changing book. Not that I agreed with everything in the book, but if you read it, it'll mess with your head. Like I've been thinking one way so long, and then all of a sudden you're like, well, this actually makes sense. And when you start looking at some back tests and start looking at some stuff, and you're like, okay, I get it. It's a good book. I mean, I mean, it's probably pretty expensive, but I'm not.
it's
I don't
well
get
worth
paid.
it.
Yeah. Oh, absolutely. If you can get it and read it, it's something that could really kind of shake your head up a little bit and kind of help you progress.
Yeah.
In some of this, does news matter? Does this matter? You know, what leads the Fed? What does this have? All that kind of stuff. And I thought it was pretty good. But all right.
Yeah, I agree completely. You know, it was me. I'd been doing this for probably about 20 years or so. And I'd come to the same general conclusion. And then I saw that book and I bought it and I read it. I went, holy crud. I thought I was like so great that I figured this out on my own, right? I'm like, this guy's got Robert Proctor. He's got this whole actual thing basically saying what it took me, 10, 15 years to figure out.
I'm like, shit, this guy's reading my mind.
I push it all the time. Yeah.
This guy read my mind. but he did a lot more empirical analysis to figure it all out.
Yeah.
More than I did. And that's what really blew my mind was like, wow, this is what I was thinking, but then he like actually showed and did some proofs and kind of explained it. So not a paid advertisement, but I mean, if Robert wants to throw me some money, that's fine. No, but
right.
no, it's just a good book. It's one of those, there's a lot of different trading books and a lot of different psychology books and all of that. But out of the top 5, that's one of my top 5 that's my reference that I actually still pull off the shelf every once in a while to look some things up. Because it's pretty big.
Agreed.
It's pretty
You guys heard that, right? Socioeconomic theory of finance. It's great stuff.
Yep.
So what do you think with the DXY, man?
DXY. Interesting thing here. The way another thing with my system here is we're in this bull zone. Worked our way up. We actually hit the target here because the target off of this was 103.85. So when it went into the bull zone back here, that first target hit, kind of went into some sideways, and then we actually went into the bear zone. But the way my system works is that you have to have 3 consecutive settles underneath the 38.2% level based on the previous zone. In this case, it went into the bear zone, but it never got below the 103.33 that it needed to basically give me a sell signal. So any longs that I had in the DXY was going to be held to possibly get a move to the upside. And so far, after a day and a half of kind of settling around there, we've popped up the last 8 hours, as you can see on these 2 green candles. So we popped from the 103.33 and we're moving our way to the upside. I mean, I got my target on the next target on it is up there around 105.33 on my 4 hour. So if you're long on this, that's where I would be taking profit on this. But it went into the bear zone, but it's one of those tricky things that it's in the bear zone, but it's not necessarily bearish. So because like markets can go 3 things, right? Bull, bear, and sideways. So this one went into the bear zone, but a little bit more consolidating off of that support. But the thing that looked good was on the daily, that went into the bull zone and it's remaining in the bull zone. We actually got in, went up, hit the fib extension target right here, hit really nicely at 104.64. So that was a sell. It retraced back. I buy back at the shallow fib. Yesterday is when I actually got the buy in there. I got my 10% long right there at that buy. So we're working our way to the upside. So it's doing what it should. We're in the bull zone. It pops up, hits the fib extension, comes down, hits the shallow fib. And the nice thing is if it holds the shallow fib, that's a good sign that the trend is going to continue to the upside here, because the reason I call it the shallow fib is because if it hits the 38.2 and then starts to rally, the next rally is usually a little bit stronger than if it goes all the way to the 61.8%. Not that it can't go back up and stronger on the 61.8%, but when it retraces all the way back to that golden ratio, sometimes it takes a little bit more effort to get back up. But if it holds that short, that shallow fib, then that psychology is there, and that buying interest is there, and that strength is there, and the ADX is pumping and showing you the momentum's there. So on the daily, the 104.64 sell, you got to buy at 103.64, and then my next target's 106.24 on the daily. So that's where I'm playing it. So right now, I'm, like I said, like the system is bullish, so I'm going to continue to ride this bullish until it hits that upside target, or if it comes back down, hits into the bear zone. Most likely, I'd still be in profit, hopefully, but that's the way it's kind of rocking out. But right now, bearish but sideways and starting to come off support on the 4 hour, but remains bullish on the daily. That's what I'm kind of showing at the moment.
Man. I mean, let me kind of pull up one here. Yeah. So, I mean, again, this right here is actually the dollar futures. And of course, I like that because you do have the volume with it.
Yeah, it's the same. I have that too. I just didn't have it up on here, but yeah.
Yeah. My default is the idea maybe this is a 1-2, and then this is a 1-2 here. But what we can see here, and if it does break out above this swing high, this 105.87 area, then that would just suggest this is a 1, and then this is an A and a B and a C coming up here. We'd probably get up there around 107. Well, we could potentially see it 109.5, but until that happens, I mean, right now, what am I looking for that makes it easy for me? It's just, do we get a breakdown below the this daily pivot here, right here around 103.135? So that's kind of what I'm seeing here. Now on this rally, if we zoom in a bit here, what I want to see is for price to be rejected prior to this swing high here at 104.44. If we can get that rejection and make a new low here, that should be all she wrote for up here. And like you said, that'll take it right below that level you're looking for.
Yep.
To kind of get that in there. So, for me, it is what it is right now. We're right here on the 4 hour. We kind of dropped through impulsively down through the big volume, large candle spread through the hourly pivot. Caught a bit at the hourly S1, rallied back up here, but we're coming right up into resistance here. And so, again, for me, it really is kind of as simple as that in this kind of sideways area here is, okay, if we get a breakout above that 104.44, then we're probably looking higher. And my target right there was probably about 0.2 or 0.3 right above yours. So right in that same 105 area that you had there. But again, if especially if we get rejected prior to that 104.44, and we even just a point lower on that, just to break down a point lower, to me that says, okay, that top is probably in and we're heading down, continuing in that. Again, if we jump at the daily was topped out here, we're dropping down, oversold, getting pretty good volume on this here. But is this just a catch from this support here, just an initial reaction? And then do we get followed down to the downside? So We'll have to see, for me, how it opens up next week, kind of beginning next week, to kind of see where we're going with that.
Yeah, but this is a good example of like emotion versus system.
Yeah.
Like if my emotion's in it, my emotion says there ain't no way in hell it should be going higher. We're long-term bearish, right? We haven't made a higher high yet when you look at it on the weekly. But my system's right now is telling me it's starting to push up a little higher at the moment. So let's ride this, when it's trying to push higher. The system will let me know if it's starting to break down. So like you said, if it gets back down to that, for me, it's that basically about 103 or so. Mm-hmm. If it starts to break that 103 to the downside, I'm going to be in the bear zone. It's going to tell me to get out. I'll take a little bit of a loss, but oh well. But I either take a little bit of a loss or this rallies up to 106 and I make some good cash.
I mean, so we all love to make profits on every trade, right? But we know that isn't the way.
Always
We're going to take losses.
Yep. Yeah, you got to be willing to take the loss, right?
Yeah, exactly. And you're doing it intelligently. You've got a great, risk management. These are all the things that nobody wants to hear because they take a little effort and it's not all slim and shiny there. And it just like, oh, I got in at the absolute low and I rode that thing up to the absolute high and I made $10 gajillion. Everybody wants that, but the reality is that doesn't happen. Again, and so it's all about that risk management, guys. You're hearing it right here. I'm telling you, Fibbo's telling you, if you're not listening, there's absolutely nothing we can do to help you guys with that. But again,
a lot of people ask for narratives, and that one's a tough one for me because I've been a technical analyst for 20 years, so I don't really care about narratives. But my indicators, if you put together something that you could follow, some kind of strategy and some risk management plan, and you stick to it and you back test it and it works and you have some confidence in it, you let that ride, because the narratives are what's going to F your mind up. And you're gonna be like, oh my gosh, what's going on? And then it's like, well, what if this happens? And what if this happens? What if this happens? Well, if you have a good system, your indicators in your model will let you know what matters. Like if some news item comes out, well, oh my gosh, this news item came out and it's extremely bearish, I'm getting the hell out. And then it goes and it moves for that 30 minutes, and then everybody gets in and out, and then all of a sudden it just starts going back to the way it was, and you're like, oh shit, I got out. But it didn't go far enough to break any patterns or break any indications or anything like that. So to me, it's the indicators that let me know what news really matters out there. The funny thing is when I first kind of started as the TA guy in my department, it was funny because a lot of people would come over and say, oh my gosh, the market's down 2%. What's happening? And to be an ass, I had a little notebook and it listed 1 to 20, and it was 20 different reasons. I said, give me a number between 1 and 20. And they would give me a number and I would go, oh, it's because of this. because I don't know what moves the market 2%. I mean, you could try to guess, but it could be anything. It could be some farmer Joe that came on there with a lot of money and decided he wanted to go short all of a sudden, for no apparent reason, just because his buddy down the street told him that you need to get in. I don't know. So it really comes down to taking emotion out as much as you can, and I know you preach that. And I try to preach that too. And I get a lot of what ifs a lot. Like, well, what if this happens? And what if this happens? I'm like, well, I don't know. I really don't. I mean, that's the answer. I really don't know. I don't know where the market's going. If I knew where the market's going, I'd be a gazillionaire.
Right.
But you got to have something that you can use to help mitigate the risk that you have when you're in and out of the market. So, and I don't know. I'm rambling, but
that's exactly what it's all about. I mean, it's tough. It's tough. We can sit here and talk till we're blue in the face,
or black in the face because I'm
black in the face. I can't see you there.
Like shadowed in the face here.
But as a trader, you've just got to, if trading is something you really want to do, you have to do the things that most everybody else is not doing. And it's to be successful at anything else in life, whatever it is you want to learn to do, you have to do those things everybody's not willing to do. Right. You look at and you go, oh man, I hate to do somebody really great, but like LeBron or Michael Jordan were so great. Right. Well, I mean, there was some personal stuff. And I mean, they probably, were set up better than most to potentially reach that greatness, but they couldn't have done it without actually putting in the work. They were the guys out there, working out 3 times a day, doing the sprints, doing the drills, doing the whatever, and there is just no replacement for that, guys. If you want to become successful, you've got to do things. And most people aren't willing to do that. Most people are, I hate to say it, but we're lazy. We're lazy in thought. We're lazy in action. A lot of people like, oh yeah, I want to be a trader. I want to do great. I want to have all these great dreams about trading. But that's all they are, is dreams. They don't actually put in the effort, or they'll put it in for a day or a week, and then they'll just kind of stop off, right? There's no discipline. There's no focus. There's no consistency. They don't have a why. Your why's got to be more than money, guys. Some people out here, every time I talk about success, I usually have somebody, saying, oh, what? So, you're talking about making a whole bunch of money, right? Well, yeah, a lot of times I am. Why? Because while money doesn't guarantee you happiness, it makes life a lot easier. It gives you choices. It gives you options. I talk about this all the time. You're not relegated to live where you're living or to do the job you're doing or to send your kids to the school you're sending them to. Money means options, and options means freedom, right? So if you're in trading and maybe you don't have a why yet, I would tell you right now, the first thing you should do is jump out there and figure out a why. What is your big goal? It's not to make a lot of money. You want to make a lot of money for a reason. What is that reason that you want to make that money? You absolutely have to get that figured out, guys, because otherwise, and it's going to be work, right? It's going to feel like work, and then you're not going to want to do it at times. And that why is what keeps you disciplined, it keeps you going through it. When you get those boring or those frustrating times, as you're learning to do something better. I cannot say this enough, guys. I really can't.
Yeah, I look at it similar. I look at money as basically as secondary. Like if I put the time and effort into something and I put passion into it, do it because you like it and you love it and you want to learn. And if you do that, I think the money will come.
Yeah.
In time, instead of focusing on, I want to do this trade to become a millionaire. That can get you in trouble because that's when the emotions start to come in. But if you really take the time to build a risk management system and to really get all your ducks in a row and you really put effort into it, don't focus on the money because the money will come. And before you know it, it's there and you're working and you're doing your thing and you're moving on. So it's the same kind of mindset, just a little different. I just look at it as secondary. I mean, it could be anything in life. It doesn't even have to be trading. It could be anything. If you really put passion into something, don't focus on the money. That'll come eventually, as time comes on.
Focus on the systems and the discipline and the focus and the consistency.
Yeah.
You'll make things happen, guys. I'm telling you right now, like you said, whether it's trading or not, you'll make things happen for you. Okay. And guess what? Here's the thing. Have crazy dreams. I'm going to say this one other thing here. Have crazy freaking dreams. Have those ones that people are going to look at you and just laugh and go, man, there's no way. Because you know what? Even if you don't reach them, you're going to be so much further ahead than where you are right now. And especially if it's anything involving creating wealth or money, whatever, you're going to be so much significantly further ahead than what you ever would have been. As long as you have small dreams and small thoughts, you're not going to get very far. You have to have dreams that are scare the crap out of you. You have to have them. I'm telling you guys right now, there's no two ways about it. You absolutely have to have those dreams that are absolutely crazy because, again, that'll get you to put in that work and that effort and do all the things you have to do. And even if you don't quite make it, you're still going to be so much further above, right? So yeah, let's go ahead and jump ahead, man. Here, what do you got on? I don't know. You got gold? You got
I got actually at the SPY, the E-mini.
Oh, yes, let me pop you.
Freaking rocked it out, dude! I got
look at that thing moving up there.
Cha-ching! I hit it today.
That is nice.
If anybody knows how futures markets work, you can make a shitload of money on futures market. But you can,
very small movements, right?
yeah, very small movements. But you could also lose a lot too. But the system here, bull zone, went into the point, got 10% long right here. I actually traded it twice. Real short trade here, which still was pretty good money. Then it came back down to the shallow fib at the time. It's up here now, but it was down here at this time. So I went back in, I got long again. And then my next target was 42.83 on this at the 200% because the fib extension target already hit.
Yeah.
It started to pressure here. And then it just broke out the last, 12 hours. But the thing is even though it dropped down into this range and I was underwater here for a little bit, it was still in the bull zone. And even though the ADX clicked into the bear area, it was dropping, not a lot of momentum for the bears. So it was showing that bull zone was likely to hold. Now I could have lost and it could have went into the bear zone and I could have taken my loss and moved on. But it did not signal, rallied right up to, or just above the 200%. So with the money that I made on the SPY, I'll buy a light so people can see my face. But this is like the way the system's supposed to work, right?
Yeah.
And then what we'll have to do now is you have to go back. Now that we hit the 200%, I got to go back in history to find a previous high, which I'll have to find it like on a daily or something, and figure out where those next levels are going to be, which I haven't done yet because this just hit before we got on this call.
Such a great trade.
Yeah, no, it was nice. That's if anybody knows futures markets, that's a lot of money. It made my weekend. Right, it made my weekend. But then on the daily, even though it went down a few times, it definitely stayed in the bull zone ever since what was this end of March. Kind of this sideways, went down a few times, but never really broke out of the bull zone. And then it's starting to crank up. The actual target on my daily is just a little higher at I think I have it at 40. Where is it? 4,375. Hadn't quite hit there yet, but it's almost there. So right now, that's the longer term look is that next level there. And then you got 44.97, which would be beyond that if it wants to continue the trend higher. So the SPY was pretty good. Gold is I'm not in gold. I missed the trade, so I just decided not to get in it, which is probably a good thing. Well, actually, I got in. If you would have got in, you would have got in here. You would have hit that first target, which was right here. You would have been buying the shallow fib, which was right here, but then you'd be losing a little bit at the moment. Still in the bull zone, though, so you're really not out of the trade yet, but you are underwater if you are playing it at the moment on the 4 hour. But if it does hold, then your next target's going to be up here at 2032. And then the daily's been on the bear side also. So I really haven't done anything. So I've been waiting for gold to get back down around 1875. If it wants to break down and get all the way down to this target, I want to wait for a downside in the bear zone to find a place to buy. 1875 is kind of the area I'm looking at. On the 4 hour, the 1875 is off the chart because on the 4 hour there. But that's where I'm at on that. Not much on that. Ethereum is bull zones held on the 4 hour. Still long. I'm back up to my long. I've been underwater for a little bit on this trade, but stayed in the bull zone. So it started to come back up. Basically touched the last candle touched basically where my break even's at. So I've been just kind of holding this one, see if it's going to make it up there or not. I do like that the bulls are trying to get a little bit more momentum, but it's still sideways, so I'm not really too concerned with it. The daily's been staying in the bull zone the entire time, kind of riding this support. I don't have any trades on the daily, just the 4 hour, and just been kind of riding it out there. So that's where I'm at on that. Any other? I got a whole bunch of charts. We could be here all day, but that's where I'm at on some of these.
Well, yeah, go, man. I'll probably have to cut this a little bit earlier than what I normally do, but yeah, man, show us any other charts you got on there, man. Anything you want to share? I'm sure everybody else would be pretty excited about that.
Yeah, Litecoin went into the bull zone, but ever since it went in there, it's been kind of just consolidating. Hasn't really flipped back to a possible, crash back down. So I can see sideways with a target. My next target's just right there, just under 100, 99.95.
Yeah.
Which would be the long is at 94.53. So 94.53 to 99.95. Not like something to write home about, but it's
not like SPY.
Yeah, exactly. And then XRP, I got a lot of questions from that recently. Went into the bull zone, hit the first target, came back down, hit the shallow fib, rebought. Working our way back up. Next target there is at 56.564 on that. So if long here at the shallow fib, which is at basically 50.50, waiting for 56.40 on that. So we're still in the bear zone or bull zone there. That's really all I had on that I was looking at this morning, and my Twitter page with your cool face right here.
Yeah, I mean, it's great, man. The targets you talk about are similar to my local targets. Cool. I think overall, the markets continue to look to bullish on the longer time frames. The weeklies are looking great. We'll see what goes on with the DXY here. But again, like I said, even if it was to break out over that local swing high there, 105 and some change, whatever that is, I mean, I think we still look maybe 107, maybe 109. But it's looking a bit long in the tooth on those larger time frames for itself. So
Yep.
Again, people that are very emotionally bearish get very upset that you don't, sit here being bearish with them. But I think what I think maybe hopefully you guys learned today from us is that we're not just like blindly, bullish just to be bullish. We've got systems that we use. Our systems say, okay, we've still got higher targets, but we have our validation levels, guys. We have levels that if it breaks through, we go, okay, well, now we got to change what we're thinking. Now we got to reassess. Now we have to look at something potentially different, right? And so, again, as a trader, that's the only way you're going to be consistently profitable for years and years and years. You can't just blindly jump into a trade.
Yeah, let me show you this chart real quick before we get off. Because one thing that you and Melker were talking about on your show on Wednesday was that we could have a boring summer.
Yeah.
And that could really test patience for traders, because we could stay in this range for a while for the next couple of months, and people are going to start going batshit crazy because nothing's going to happen, and they're going to get frustrated, and emotions are going to come in. They're going to start doing things that they probably shouldn't do. Then you're going to start losing money, and then you're going to get all pissed off, and then you're going to quit, and then you're going to move on. But so the next couple of months could be really something that's going to be based on patience. And I try to teach that a lot with the guys in my group. That's a big deal. You got to be patient, and you got to let the market come to you. Don't chase it. Let it do what it's supposed to do. If it wants to go sideways within a $2,000 range over the next 2 months, that's the way you got to play it. That's what's going to happen. But when I look at this, when I was on Crown shows, this is where a lot of my 49 or 48K came into play. But if you look at this on here, we got the halving coming up in April of 24 at the moment. So there's a lot on this chart, but the main thing I was going to show here is we broke this trend line here, which is 78 bars from the halving, or from when it made a new high above the halving. So like when you look at when it broke this trend line right here, if you go 78 bars, it's when it made the new high post halving. Right here, same thing, 78 bars from when the trend line broke to post halving. So this is where the patience is probably going to come in, because it would be nice to get a nice new high above 69K right away. But the way this has happened in the last couple of times didn't show that. We didn't make a new high until post halving. Right. So we could get up to this 34 or 35.4 and the low here at 22, 23K. And we could be in that range for a long ass time. And that could be really boring for a lot of people. Or we can kind of crank back up to that 47.8 or that 48K that I was kind of looking at, is that 61.8% level that I was watching. So it could go up to 47, come all the way back down to 22 before we even get back up. So the next few months could be a patience tester. So that's something that we'll have to kind of watch. And hopefully we don't have a boring summer. Maybe something,
right?
But again, there's other markets. So just because Bitcoin's in a range and not moving over the next couple of months, other things will be, and you just got to keep your eyes open for those other trading opportunities. But
exactly,
that's what I was going to kind of say was patience is probably not taught enough, because it's one of those emotions that could get you pretty quickly. Like, I got to do something. I got to do something. Yeah. Now you don't. Just sit on the sidelines.
Sit there. That's right. You don't have to. You feel like you have to.
Yeah, you feel like you have to. But sitting on the sidelines is actually doing something.
Yeah.
You are making a decision, and that decision is patience. And that's all I was going to show.
No, great stuff. I mean, guys. Again, if you're paying attention, you're going to notice that Fibbo is going to come out here, and in other places where he's showing up, and he's going to say a lot of the same things that I continue to tell you guys. And why? Because we've both been doing this long enough. And if you hope to be in this long enough, you have to start taking to heart these things we say. It's not that we know everything or that we know definitively what's going to go on. We just know that there are these main things which really aren't even have to really do with the art itself of trading, right? It's the art of self-control. It's the art of understanding how to be better at whatever it is you're trying to do. And so it's these same things that are consistent across multiple disciplines. And we've just learned that these are just as important in trading and that much a part of whether you're going to be successful or not. So
I look at it as horizontal playing field here. No hierarchy. I'm not better than anyone else.
Yep.
I'm just a team player along with everyone else, and we all work together to figure it out. That's the way I kind of look at things.
That's right. Share what we know over all these years of doing it, and but at the end of the day, guys, like we said,
too, and I learn from others.
Yeah, we're still both of us still learning, still open to learning, not claiming to know absolutely everything out there. Because I personally think that the moment you stop learning, the moment you think you know everything or know enough, is really when you start falling behind. So
you'll start.
I'm an old guy. I've been doing it a long time, and I'm still looking for new ways to look at the charts and risk management and everything, trying to find anything extra that I can put in that'll help me better. Had a quick question here. What do we think about Chinese money getting into crypto again? I think Fibbo will probably feel the same way as me. Is it's in the charts, right? People go, oh, new money coming in, so that means new buying coming in. But again, if you look at Wyckoff or these other things that I've shown you guys, and the idea that we've been through accumulation, we expect price to rally higher. And if new money's coming in to buy up new stuff, then price will rally higher, right?
Yep.
Again, Fibbo said he hates narratives, and I tend to be the same way. If I've got a narrative, I usually back into it based on the chart. If the chart says this, so here's my narrative. I don't just do it off of whatever news event's going out there, because again, first of all, you have to get it right, and then you have to get the result of it correct. So watch the charts. It's all in the charts, guys. Okay.
I'm the same way. Indicators will let me know if there's an influx of money.
Yeah.
Regardless if it comes from China or it comes from anywhere.
Right.
If money's going to be coming in on a money flow, then it'll show us.
Yeah, exactly. All right, guys. Well, I've got to get out here a little bit early today. As always, man, enjoyed having Fibbo on here. Hopefully you guys enjoyed it as well. I'm gonna put a big picture there while he gets his water, so that way we can all see that. But yeah, so guys, hey, listen, remember, Fibbo's going to be on here every other Friday. So if you want to put that on your calendars there, check out. That'll be great. Right now you can follow Fibbo at Fibbo Swanee on Twitter. You can follow me at TX West Capital and Texas West Capital everywhere else. TX West Capital on Twitter. And then if you want to join Fibbo's Threshold Theory, guys, jump on over there to TexasWestCapital.com. We're soon going to have it all merged in with our new membership site over there at TexasWest.capital. So if you want to join, our tier 3, our elite tier there, you'll get that over there on TexasWest.capital. And for the moment, probably after this weekend, we'll get everything merged over there. But you can still jump in with Fibbo there on his Threshold Theory on at TexasWestCapital.com. By the way, guys, hey, listen, sometime here in the next few weeks or so, our elite tier 3 is going to have access to Fibbo's Threshold Theory channels as well. So, he and I, our thing is just to get you guys something that resonates with you. Mm-hmm. We look at the markets a little bit differently, but from the same basic starting point, and we get pretty much to the same targets. And so the goal is just to give you guys options and teach you guys things so that hopefully you pick up something or something with what we're doing and you merge it into your own thing to where you can be consistently successful there as a trader.
Yep.
I am working on getting Fibbo 100% out of his day job and with us over here, Texas West Capital, guys. So don't think that's not going to happen. That will happen. I'm going to make it happen. But I think there's just so many possible things, so many great things that we can do for you guys. And it's just been so great to have Fibbo with us, man. For me, I take a lot of pride in what I do and how I teach. And it's important to me that anybody that's over there under our name is doing that same thing. All right.
Yep.
So I got to get out of here. I hope you guys have a great day.
First thing I'll do, I'm going to buy a light for the next time, but I'll expense it to TWC because I'm an employee now, right?
Well, there you go, right?
I'm just messing with you. No, but I will have a light next time. I feel bad because I'm in the shadow the whole time. But I'll get a light for next time.
All right, guys. Hey, listen, I hope you guys have a great day. Remember, the only thing you control in the market is how much you lose. So keep working on risk management, all right? You guys take care. We'll see you later.